Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the legend himself, Willem Middelkoop, author of The Great Reset. He is the founder of Commodity Discovery Fund and the Oracle of Amsterdam. Willem, welcome back.
Well, that's a very kind introduction. Thank you, guys. Always glad to be back.
You're one of our most popular guests we've had on the channel, Willem. We love having you. So I want to get. I just watched another interview you did recently, where you said, you're the author of a book about this subject, The Great Reset, and I'll put the link in the description. But you've said people are always asking you when is the reset going to happen? When's it going to happen?
Yeah.
And you've said we're in the middle of it already. It's a process. And I wanted to ask, what are like the key events of this process that tell you it's happening? What are you looking for? What are you watching for?
Well, people always can read it because we publish the full PDF on our website. So if you Google the Big Reset download, you can find the full manuscript. But I will tell the core thesis. The core thesis of the Big Reset is that every 60, 70 years, we need a big change in the international monetary system. And we had one in Bretton Woods in 1944. We had a smaller one in 1971 when they took the dollar off the gold standard. And this is a topic Jim Rickards also talked a lot about this, and he wrote a lot about this. I learned quite a bit from him about monetary resets in the past. And that's why I came to the conclusion around 2014, I published the Big Reset, that around 2020, the imbalances of the current system would be that large that there would be a lot of problems, and we would reach a point that we had to solve three major problems. We would need to find a new anchor for world's financial system, so successor for the dollar. Well, if you read the speeches of Mark Carney, who used to be the governor of the Bank of England, he spoke about this during his Jackson Hole famous lunch speech in 2019, that we need to find a successor for the dollar. So that's official. They're working on this, but this being worked on behind the screens because you can't discuss this in public. So finding a new anchor, that's the most important thing. Hasn't been completed yet, but we know that they're discussing it, because they have spoken about this in public. The other one is debt restructurings. We need debt restructurings. Look at the national debt of the US, just crossed 30 trillion. We were at 10 trillion 20 years ago, 22 years ago. So this is going parabolic. This is unsustainable. So we need to have a debt restructuring. But for a debt restructuring, you need a Bretton Woods type of conference. Well, the IMF came out with a story in 2020 that it's time for a new Bretton Woods conference. They call it the Bretton Woods moment. We haven't heard anything back from the IMF, but we know they're working on it because they said that's a new Bretton Woods moment. We also had a speech by the Secretary General of the United Nations, who said because of COVID, we learned about the deficiencies of the international monetary system, and we should have this international conference every 2 years about the monetary system. We should change it all. We had the World Economic Forum publishing their Great Reset, telling us we need to change everything because of COVID, we have problems everywhere and we need to build new systems. So we have all these indications, but coming back to my thesis, we need to find a new anchor, we need debt restructurings, and I think we need a dollar devaluation, and a dollar devaluation is a gold revaluation. And I think that's the one which is the most interesting one for our listeners, for our audience. Because if you invest in silver, for all reasons, fundamental or technical or whatever, there's one main reason to invest in silver, because if we get this dollar devaluation like we had in the 1930s, we get a gold and a silver revaluation. Mm-hmm. And that could be a very sudden shock. And it would be a kind of situations, you got to be in it to win it. If you're not in silver, if you're not in gold, and we'll get this reset, you will be too late.
Is the theory because there's just no time to get in once it happens, because it happens so quickly?
Yeah, I think Eric Sprott touched upon this quite a bit as well. I learned a lot about these topics from Eric Sprott. Eric Sprott, the famous billionaire, he's retired now. He built Sprott Securities in Canada, and he studied the silver market an awful lot. And he always said, once this COMEX system breaks down, and it's not if, but only when this breaks down, you'll see $100 silver within a week. And when you have this sudden move of markets, and we know in precious metals, this can be very sudden moves. People are too scared to buy into the rally because it has gone up already 30-40% in 2 days. And also, if you want to buy physical, and we've experienced this in 2011 in Europe, and also last year or 2020, March 2020, you can't buy any physical silver because that's such a small market. So they won't take any new orders. If you want to play these themes, and silver will go up for fundamental reasons only, you know. We've had a production deficit since the 1970s. Actually, in 1965, President Johnson went on national TV to explain why we would get rid of silver coins, because there was a shortage developing. That's 60 years ago. We had a production deficit almost every year. So a shortage of silver is guaranteed, but it has taken so long that a lot of people doubt it. If you look at the technical reasons why silver would rise, we've seen $50 silver in 1980. We've seen it again in 2011. Silver is the only metal trading at 50% discount to its 1980 top. It's the only metal.
You know, you mentioned 1980, the Hunt brothers, and then 2011, we also went to 50. But there was another spot in between there where back in the late 90s when Warren Buffett was heavily invested into silver. That was a very interesting time. He bought 3,500 tons of silver in 1997, and then you never heard about it again.
Yeah.
I mean, did they get to him, or what happened?
This is very intriguing to me. You know, he bought over 110 million ounces of silver. Right at the bottom for $3-4, and he made a handsome profit of 100 million, but he sold it all a few years later. And I think it's quite clear that there was some pressure on him to stop building the silver position. And what's really strange is Warren Buffett. He's a financial guy, you know, he invested in so many markets, and he's so knowledgeable that he made this killing in the late 1990s. And he was pointing to a physical shortage developing. So he was telling our story right back then. And it's strange that a guy who knows this has been quiet about silver for 20 years, never spoke about it again. Even Donald Trump spoke about silver and mentioning that there's a silver shortage. So this is a knowledgeable guy, but I think he is aware of the fact when silver starts to run, gold will follow, and this will have serious consequences for the US-based financial system. And we know that Warren Buffett has been helping Wall Street, has been helping the US when things get tough. So you can't. I'm not surprised that he's not he's not a silver investor nowadays.
Yeah, but silver is so unloved right now. You know, even it's down below 23 as we speak. You've said in the past you're a big investor in PSLV, the Sprott Fund, and a lot of silver mining companies. Are you still doing that? You're still in that position? Yeah. Nothing's changed?
Yeah, but you know, I hate what we call that money. When you put money in something and it's not running. So we watch trends. You know, I'm a fund manager. I have to invest the money as good as possible. So we always take small positions, and then we wait for the breakout. And when we think this is for real, we'll triple our investments. So we have core positions in silver. We have core positions in a few silver miners. But, you know, I'm not a guy who will always have positions in Pan American Silver or First Majestic, because most of the time they will not make you money.
Yeah.
But you need to have positions, and we are professional investors, so we can change and switch our positions very easily. But a normal guy who's working in the oil business and comes home late at night, you know, he will miss the breakout. So he has to position himself now in the best stocks or in the best silver place. So we are more actively managing our portfolio, and that's why we're not big. We're not adding to our silver positions massively, but privately, when I have a lot of cash, I add to my Bitcoin stash and I add to my silver stash. You know, that's what you do once in a while. But I've been doing that actually since 2002. And well, silver was $4 an ounce at that time. It's much higher now. But I always bought silver because for the last 20 years, I've been sure that one day we get this big move. And I was in the big move in 2010 and 2011. And actually, I made a lot of money because I also bought silver futures during that move. So at that time, we all thought this is the move. This is the move we've all been waiting for. And now it will never get back to 10 or 20. But that happened, you know. They took control of the silver market again. And the next time they'll lose control, it will be an even more violent move, because the move in 2010, 2011 was a move of 14, 15 months. I can't remember exactly, but the next move can be in a few weeks.
Hey, I'm gonna share something that just happened the other day, and you're probably familiar with this. Dutch inflation is going nuts. It's 7.6%, which I'm sure you're familiar with. Do they manipulate it in your area of the world, just like we do in the United States with CPI? Do they sort of manage it down by only counting what they want to count?
I wrote this book. It's my first book, was only published in Dutch in 2007. I hope you can see it. Als de dollar valt, when the dollar collapses. And in this book, I wrote about the unstable financial system and the problems for the dollar for the future. And I also had a chapter in this book about the inflation. And I was informing the readers, so this was 2007, that the inflation numbers are bogus. You know, the inflation numbers are managed as well, like the precious metals prices are managed. And I was always surprised, you know, that not more people started to act on this information. And now it's 13 years, 14, 15 years later, now people start to worry about inflation numbers and that they're not real, because here in Holland, in our system, the real estate prices are not part of the inflation. A lot of the taxes aren't part of the inflation number. So the model has been changed quite a bit over time. And now in Europe, they decided that real estate prices will be added to the CPI in 2025 because they need a few years to fix the model. Can you believe it? So, you know, I never trusted inflation numbers. I always advised people to buy hard assets because they would lose much of their purchasing power. And now after the start of the Corona crisis, it's like everybody's waking up suddenly. Everybody's waking up, you know. We're a small boutique fund. We had $50 million assets under management 2 years ago. Now we have almost 200 million. And we didn't put any ads, you know, people just recognize the story. You have to be in hard assets. You have to invest in commodities because that's one of the few hard assets which is still very undervalued. So people get the story, and I'm so surprised because I've been beating the drums actually for 20 years. My first publications, they're still online, were in 2001, 2002, explaining it all. Central bankers will print, they will lower the interest rates, they will debase the currencies, and you need to find refuge in the hard assets, especially in precious metals. So that's why I like this this crisis now, because it's all happening now.
Yeah. Just the other day, the European Central Bank, their inflation numbers, not just Holland or the Netherlands, inflation's running higher. It's common throughout Europe, and there's a lot of pressure on Madame Lagarde, Madame Inflation, as her new nickname is, to raise rates. But at the same time, they have to keep buying these bonds from Greece, Italy, Spain, Portugal, because no one will buy their debt because there's such basket cases, right? So the ECB has this trap. If they have to keep buying the debt for those countries, otherwise those countries will probably implode, correct? But at the same time, they have to keep easing by buying bonds, but at the same time, they need to raise rates to fight inflation. It's a different type of trap than we have in the United States with the Fed. I mean, do you think there's any resolution to this? I mean, how does the ECB handle this?
I know Dutch central banker quite well. I've been interviewing him and speaking with him for over 10 years. And his name is Lex Hoogduin. He used to be the vice president for the Dutch National Bank. And he was in a position to become the president, but it was a political decision that they choose a younger guy. That's Klaas Knot, which is the current president of the Dutch National Bank. And because Lex Hoogduin is not a central banker anymore, he's a professor now, and he's much more open. And he became a critic of central bankers, and he tweeted a few months ago, the ECB is trapped. This guy has been working for the ECB and the Dutch National Bank for decades. Wow. And he says the ECB is trapped. So he's speaking our language, because all the honest people who have any knowledge about the current situation know they are trapped. And when you're trapped, that's why you need a reset. When you're trapped, you can only get out by doing something spectacular, change the system. That's the best evidence for my reset thesis.
Well, you've said also that you believe that they can't taper, neither the European Central Bank or the Fed. They're not going to be able to complete this taper without some sort of market crash or major decline or whatever. And forget about rate increases. You don't think they're even going to be able to taper. Would you go into that, please?
No, you can't taper a Ponzi. We're in a Ponzi scheme, and this system needs to grow. But I have more evidence. Between, I think, 2012 and 2017, they promised us to taper as well. Maybe you still remember.
Yeah.
They always said,
watch the paint dry, right?
We'll taper next quarter, next year. And then they started to taper in 2018. And actually, the balance sheet of the Federal Reserve declined a bit. Maybe you can find it. Google balance sheet Federal Reserve, then we can show it. Because it's a very great example. If we can show the graph, you see a decline in assets, 2018. That's the tapering. We had to wait 5 years for that. And so look what happened.
This was the taper right here, this is where Janet Yellen said,
yeah,
it'll be like watching paint dry, watching us sell off the bonds, right?
But look, it declined. So all institutional investors were telling everybody, look, we'll normalize the balance sheet and we'll normalize the interest rates. But look what happened then.
It was before the virus too. It was August, September 2019, right?
And what happened? What happened in September 2019?
That was the repo crisis where they bailed out all the banks with trillions, right?
Yeah, what happened there was actually a funding crisis of the US.
Wow.
The there was a debt ceiling, and they canceled the debt ceiling. And then Trump, he had a huge deficit. So they did a lot of auctions of new treasuries. And then they found out that the primary dealers, which are the larger brokers and banks on Wall Street, they didn't have enough liquidity to take all the new treasuries on their book. And the primary dealers take the new treasuries on their book and then resell it to institutional and other investors. But there wasn't enough funding, there wasn't enough liquidity. And then all hell broke loose and the rates jumped. And then the central bank had to step in. And that's what you see there. And first they said, we'll need to buy some more treasuries for a few days. And then they said, we'll need to do it for a few more weeks. And then they said, we'll need to do it until the end of 2019, because there's not enough liquidity during the end of the year and the New Year's Eve. And then COVID arrived in December and January. And then everybody forgot about the funding crisis. And look what happened ever since. Creation, a doubling of the balance sheet of the Federal Reserve. So everybody forgot about the repo crisis. Everybody forgot about the huge problems the Treasury had to auction enough Treasury successfully. And now they have an even a larger problem, because the budget deficit is 3 trillion on a 7 trillion budget. You know, it's amazing. And we see the US national debt reaching 30 trillion. And I think we added 1 trillion in 7 weeks or 8 weeks. So
oh, here it is. Yeah, yes. I tweeted this one out. We hit 30 trillion on February 1st.
Well, and show you other tweet about the graph, you know, the red one showing the skyrocketing national debt. I think you tweeted that one as well last night or whatever.
Yeah.
But this is unsustainable. But nobody is talking about this. Nobody is talking about the 3 trillion deficit. You know, I tweeted yesterday. Imagine you run a company like this. You know, having an income or revenues of 3 trillion or 3 billion, let's say, and having your costs at 6 billion, and that year on year, you can't survive like that.
Yeah, but back to I want to point one other thing out before we move on. You know, they were talking about the taper would start in November, and then in December they said we're going to accelerate it to 30. We're going to reduce by 30 billion a month. You look at this chart, this is updated through January 24th.
Yeah.
Supposedly 2 or 3 months into the taper now. And I don't know. The graph, I don't see it.
You know, watch what they do, not what they say.
Yeah.
Central bankers.
I'm sure if you added up all these numbers, it has dropped a little bit. I've been told by people who did the math. I'm not going to do it here on this video. But they're not tapering at nearly the rate that they told people they were going to do back in November and December. And
but you know, they can't taper.
They're supposedly supposed to be done with this by the end of March. I mean, if you listen to what they said, they're going to be out of the market, no longer buying bonds by the end of March. Look
what happened in 2019 after they started tapering. You know, we had a crisis right away. This situation is even more serious now. So they will never reach that point which they reached in 2019, that they were actually starting to taper, and we actually saw a decrease of the balance sheet of the Federal Reserve. We will never see a decrease of the balance sheet of the Federal Reserve again, or there needs to be a monetary reset. Maybe the rate of increase will decline. So they won't grow the balance sheet as fast. So we'll see a declining rate of growth, but we'll never see a decline of the balance sheet of the Federal Reserve before a monetary reset. I'm quite sure about that.
Well, here's another one that I found really interesting that someone posted on Reddit, a guy named Silver to Mars. He posts a lot of great data on the subreddit for Wall Street Silver. This is who's buying the treasuries, right? Who buys the government debt? Who funds the deficit? And between 2002 and 2019, it was mostly, the private sector, international foreign buyers of the private sector, and the Fed only bought 15% of the debt. Now, in the past 2 years, the Fed is buying 64% of our treasuries, the newly issued treasuries.
Yeah, but if you study this worldwide, because you guys are always too focused on America and the Federal Reserve, and we always look at the broader picture. I can show you a graph that all net issuance of sovereign bonds since 2015 have actually been bought by the central banks themselves, 100%. There's not enough demand anymore.
You mean you're counting Japan and the
Everything.
ECB and all of them combined?
Yeah.
Well, we almost lost the dollar in 1980, and then Paul Volcker came along and fixed the economy. Then you've seen COMEX, they changed the rules on silver. You couldn't buy new contracts. You can only close out the prior ones. Do you believe that the Hunt brothers were scapegoats to cap the gold market?
Well, actually, the Hunt brothers thought they were smart. They were already billionaires. They made a lot of money in the oil business, and they studied silver and gold, and they thought, let's be smart, let's corner these markets. But they weren't aware how important the silver market was for the US dollar system, because if there's an accident in silver, you'll have the same accident in gold, because the mechanisms are the same. There's too much paper silver out there. They manage the price. And if the COMEX implodes, and this happened with the potato market in 1976, somebody was short potatoes in a massive way. We got a default there. You can't buy any potato futures on the COMEX anymore. They stopped trading, never traded since. So this shows you can break a market. So the silver market was almost broken in 1980 by the Hunt brothers. And of course, they needed to change the rules during the game. And of course, they made sure they bankrupted the Hunt brothers, because they were playing it on a margin. If they would have only accumulated physical silver, they could have won the game. But the saying, don't fight the Fed. I would never go public with a campaign like Max Kaiser have done. Let's kill JP Morgan. Let's start, because I learned never to take a fight to somebody who's much stronger and larger and can run faster. You always lose. It's a guaranteed loss. So I'm not that courageous. So the Hunt brothers, of course, they were killed, and they, you can call it a scapegoat, but actually they were punished. But there's a new punishment coming. I've been reading a lot about what central bankers say about the coming reset, and that we all need to buy green bonds now. And they're working together in Davos with the World Economic Forum, and they're building this club of all large companies joining forces with the central banks and politicians, that we need to green the economy and we need to invest in alternatives. And Mark Carney, I mentioned him before. He was the governor of the Bank of England. There's a speech, and he's saying it openly. The investors who will help us with this transition, they will be rewarded. And the investors who don't help us with this, they will be punished. So this is China. This is state capitalism.
Well, that reminds me of something I just saw on Zero Hedge yesterday. And I tweeted about it on February 2nd, is the ESG green movements are leading specifically to a commodity and an energy boom. Because the politicians, like what you just said, they're strangling mines, even in the metals needed for the green revolution.
Yeah.
They're trying to strangle these mines. There's a lithium mine that just got shut down due to protests or a project. There's some major copper projects in the United States.
In Serbia. Yeah.
But what do you know? What's with this conflict? They want the green revolution, but they won't let us mine the metals that they need for that green revolution.
No, that's true. And we get a lot of these questions. So they ask us, how green is your fund? And then I say, we're very green because we invest in all these new mines, which are necessary to have this green revolution, this green transformation. And that's the green part. But we're also not green because, well, we invest in mines, and mining is not a green activity, although you have new mines now in which all vehicles are EVs. You can make all the trucks run on electricity nowadays. But you're right. There's a huge struggle ongoing in financial markets where all institutional investors are being pressured not to invest in oil and gas anymore. But will they still be allowed to invest in copper and nickel mines? We, of course, we're not institutional investors. We still can do as we like. But I have some serious concerns about a situation 10 years out from now, because if you read the plans by the United Nations about what they say, how commodities need to be treated and how everybody in the world will need to get access to everything, and nobody is allowed to be poor anymore, nobody's allowed to have hunger anymore, all great claims. You can't be against this. But they also say the benefits and the profits of commodities and natural resources should be shared by all. Well, that's a problem for our business model, But who's making the investments? We make very risky investments because nobody is daring to invest in a junior mining company. You can't take out a loan when you're a junior mining company. So I think there will be a lot of pressure, and we're highly regulated, and we're already being confronted by some rules that we need to define and explain how green we are and how sustainable we are. Well, we always have a very short answer. We're in mining, so that's not that sustainable, but we're helping the green revolution. So it's a very binary, or the story has two sides.
Yeah. It's a very confusing set of rules that we're all being forced to live under right now with this ESG versus mining, and they don't seem to understand most mines are in the middle of nowhere, 100 miles away from power lines. So a lot of these places, they use diesel gensets to have power on location to actually run the equipment. So if you shut down all the oil and gas, which they talk about as a legitimate, they think that that's a legitimate option. Oh, let's just get rid of all the fossil fuel. But if you do that, guess what? There's a lot of copper mines. If they can't get diesel, there's a lot of copper, nickel, silver, a lot of mines that would shut down, correct? If they can't get access to diesel.
But look at Europe here. We rely a lot on alternative energy now, wind and solar. Well, if you know the winters here in Northern Europe, we have weeks and months on end with fog and clouds and hardly any wind. And now the Germans are so stupid to close down their nuclear reactors. So there's really energy scare now here in Europe. And I know many people, actually our trader, his energy bill doubled overnight, doubled.
Wow.
So that's why the inflation is 7% now in the Netherlands. And maybe the energy price will go down by 30% next year, but it will still be up 70%. So that's why this inflation is permanent. And this all started with the currency debasement, the massive currency debasement after March 2020. Everybody who has a lot of cash and who's not getting any interest on his savings is looking for investments now. And the smart money understands that there's scarcity of almost anything valuable in real estate, in energy, in commodities. And that's why our fund is doing well now, because everybody gets the picture now. And people who don't get the picture now, they're too stupid to ever get it. If you don't get the picture now, you know.
Hey, Willem, thank you for giving us 40 minutes now of your time.
Yeah,
we really appreciate it. The audience loves you, and we'd love to, of course, you already know I'm going to ask you again in 2 or 3 months to come back. You're the oracle of Amsterdam, and we got to hear from you, man.
We are getting more and more selective with all the interviews, because there's so many podcasts out there now. I can fill half my day by doing podcasts. Mm-hmm. So we're very, very selective, but you will always be on our list.
I appreciate that. We love you, Willem.
You're working for the good cause, and so
thank you.
It's me and Daniela at Stansberry, right? We're always going to be on your list, right?
Well, you know why I like this so much. I've been trying to talk people into silver for 20 years.
Yeah.
Uh-huh.
Actually, I was on Dutch national TV, what was it, 4 or 5 years ago, explaining about the silver shortage, and nobody cared. And then you guys came along, and you got it, and you do the work, the hard work. I was not willing to do, So that's why I support you, because you're telling the story I've been telling for 20 years.
Well, yeah, we're up to 179,000 members on Wall Street Silver. We have our little Valentine's Day banner up right now on the, it just changed yesterday. But 179,000, and it grows about 1,000. It seems like every few days it goes up another 1,000.
Mm-hmm.
So people
it's
are
like my Twitter feed.
people are waking up. Yeah. Hey, and just so everyone knows, let's follow Willem. Willem's got a great Twitter feed, a lot of great information. You're getting famous. I think at the beginning of 2021, I remember you were around 50,000.
Yes.
So you've grown over 50,000 in the past 12 months, probably.
Yeah, because of you guys
on Twitter. But I think it was
all these silver apes.
I think it was Stansberry more than us. You had like an 800,000 view interview on Stansberry.
Yeah, I was surprised to see that, almost 1 million views. And it's not about me, but it's about the mainstream media. People are fed up with the mainstream media. Look at the Joe Rogan discussion.
Yeah.
Nobody talks about the great information he sent out. I had the same experience. They try to find one mistake in your book or in your presentation, and then they'll hit you on the one mistake. Yeah. And they will ignore the 99% of all great information and scoops you had. And we've seen this worldwide in the Western press. But Joe Rogan, the number of people he reaches, it's 10x compared to CNN. Yeah. So we still call it the mainstream media. Actually, the CNN.
He's the mainstream now. He's the mainstream. Yeah. He crushes. Yeah. Even Fox News, which is one of the biggest in the United States, with Tucker Carlson or some of their programs, he's twice as big as them, his audience, and he's worldwide.
I have the same when I do an interview with you guys or with Daniela. I reached 800,000 people. When I was on Dutch national TV, I reached 30,000, and that was national TV. It's a joke. I don't. Yeah, but everything. But that's the reset. You asked me, when is the reset? This is the reset.
Yeah.
Everything is being reset. Everything.
Yeah, it's amazing. And thank you very much, Willem. We appreciate you. And
thank you.
Let's do it again in 2 or 3 months.